In today's video, I have an extremely important market update. Currently, the crypto market is very shaky. Altcoins are bleeding, time capitulation and apathy is setting into the market, and a lot of people are confused as to where we currently sit and what they should be doing with their portfolios. So in today's video, I'm going to give you the data needed to contextualize where we sit in the cycle, and also, given the current market conditions, what you should be doing, the types of altcoins that you should consider buying, but also the types of alts that you should strongly consider avoiding due to their current conditions. We're going to go through all that and more in today's video, and hopefully by the end, you feel more equipped, given that these current market conditions are relatively challenging, at least compared to the meta that we saw to kick off the year in the Q1 months. It's no secret that many altcoins in the market over the last week have taken major hits. Some of the biggest altcoins across their respective sectors are down 15, 20, 25%. And this caps off a period for the market in general, which has been really choppy. Bitcoin's been moving sideways, it's been chopping in this range, and a lot of positive events in the market have been reacted poorly to in terms of price. So hopefully today I can give you a little bit more context as to how I currently view these market conditions and how you can actually navigate this market, given the fact, a lot of altcoins are down significantly. It does beg the question as well, is now the time to be buying? What types of altcoins in that case, should we be buying? And I'm definitely going to get into that in the second half of today's video, because I know it's a common question and one that is naturally going to crop up after such a major discount. So before we get into all of that stuff, I do want to remind you that if you do want to win some free crypto, so if you aren't doing too well on the trading front or on the investing front, there actually is an opportunity to win free crypto in today's video via this new Blowfin campaign that we have running for another 3 days only. So basically, all you need to do, using the link in the description below, is deposit $100 and you're going to get airdropped into your account 100,000 Pepe tokens, 10,000 Flocky tokens, and 3 WIF tokens for the first 200 users which sign up using that link. In addition to that, we also have a lucky wheel which allows you to win 300 Flocky, 100 WIF, 5 million Flocky, or 1 million Pepe as some of the top prizes here. The top prize, this 5 million Flocky, if you land on this when you spin the wheel, is actually worth around $1,000 at today's current valuation. So that is a significant amount. You can spin the wheel, potentially win $1,000 or any of the lesser prizes here. The way you get entries to spin the wheel, of course you have to use the link in the description below, is via building up trading volume on the exchange. So just for every $10,000 in volume that you build up, you get 1 spin to spin the wheel, and you have unlimited spins of spinning the wheel during this 3-day period. So to summarize, deposit more than $100 and you're going to get an airdrop for free. And then if you want to go a step further, you can also earn entries to spin the lucky wheel and win prizes such as $1,000 worth of Flocky for spinning that. So I'll leave a link in the description below. If you are interested, just need to click that link and sign up for the campaign. Obviously right now market conditions are challenging, so I like to find ways to give you guys the ability to win free crypto as well. So now let's get into the charts. Let's do a little bit of a market update, because we have had some major macro news which is currently affecting directionality. And I also want to give you a broader view as to how I view Bitcoin, and then we'll move on to the more altcoin-centric discussion here. So from a Bitcoin perspective, I really want to lay the land here. You've got this range low on the daily and weekly time frame at around $58,000 to $59,000. This is the major macro support level that, in my opinion, Bitcoin must hold in order to maintain its bull run positioning from a macro perspective. So obviously this is quite a dip. If Bitcoin did go down to the must hold level, another 10%, in this case, many alts will be down another 30, 40%. But that is, at the end of the day, your major macro support level. And this does line up with the 200 EMA on the daily as well for the Bitcoin bull run. So that is kind of your invalidation from a bull run perspective, in my opinion. Stay above that. We are still just in a range for Bitcoin and still technically on a higher time frame in a bull run. Then you have this level right now, which becomes a bit more obvious on the 4-hourly, and this is the mid-range level of this range. So typically when ranges form, they have their mid-range pivot points, which affect directionality in terms of the propensity for that coin to test, its highs or its lows of the range. We're currently flirting with that mid-range level at the moment, acting as an intermediate support. So interestingly, right now we are at the support level. So technically from a Bitcoin perspective, this is the level that you would expect Bitcoin to bounce from. If it does start to break down below this level, however, and that would be represented by a daily candle close below that level, I do think the possibility of Bitcoin coming down to that 60 to 61K region becomes much, much higher, and that is the next target for Bitcoin to the downside. However, it is important to note we are looking for a Bitcoin price response in this region, so getting too bearish at support, I've also seen be a major mistake that traders do make in the market, and that's why I'm being a little bit hesitant here to be max bearish, given the fact that we are actually at support. And these are typically the levels where you do see a bounce. The last 2 times Bitcoin has tested this level, it actually has ended up bouncing. Just want to provide a bit more macro context for you on the Bitcoin front before we get into alts. And then, of course, you don't just have this support level, you also have the resistance level, which is at the 73K region. And this is your must-break zone for bull run expansion. So any major bull run expansion to the upside is going to come on a break of 73. We've had multiple tests and Bitcoin has failed to break above that level, despite having a lot of positive catalysts over the last couple of weeks. So from a strength perspective, I do think that is slightly bearish that Bitcoin, despite having a lot of positive news, failed to break that level. And for that reason, I think you've got to be a little bit cautious in terms of the market. But at the end of the day, the price action of the market is going to be the major thing that matters here. As long as you're holding above this mid-range level, I don't think you need to be panicking about 60K just yet, but obviously we're going to keep our eye on this range. And another thing to note about this Bitcoin range, because it's important in terms of where we currently sit on alts, is that we've been ranging for 107 days. This is one of the longest sideways chops that we've had, since 2022, since FTX. Even in 2023, although we had low volatility in August, it didn't chop for 107 days. It chopped for like 30 to 40 days. So in terms of time capitulation, I do completely get why people are getting antsy, panicking. Even for me, I find this kind of price action extremely boring. We obviously want directionality. Even if it's downwards directionality, that does create opportunity. When you get those liquidation cascades, remember back in April, those are great accumulation opportunities where you can make, 30, 40, 50% on the bounce. Whereas sideways chop and bleeding market conditions make it super hard to trade unless you're just shorting every single bounce on alts, which is a strategy, but not really one that I implement with size in my portfolio, because that's not really how I trade. I'm more of a value trader / investor. And for me, the risk reward of longing in a bull market is still much, much stronger than, taking these shorts, even though you can scalp. So these market conditions, it isn't just you, even for me, they are challenging because the moves aren't particularly violent. They're just choppy. And no one really likes choppy conditions. As traders, we like volatility. Volatility is where you make money. It can be long, it can be short. Those are the conditions where opportunities present, both to the long and the short side. So that is what I'm seeing on Bitcoin. I'll get more into specific alts and my strategy around that later in today's video. Firstly, I want to touch on what happened from a macro perspective. So the Fed, as expected, left the Fed target funds rate at 5.25 to 5.5%. That is pretty much what was expected. Powell's presser did not really give us anything new. He wasn't particularly hawkish. In fact, there were some lines which were slightly more dovish in his presser, but that didn't really impact the market. The market was flat and actually ended up dumping afterwards. So we did see that de-risk into macroeconomic data and FOMC, and then we've pretty much been flat ever since the data came out. And actually, looking at the data, the CPI came in lower than expectations. The PPI also came in lower than expectations, which is good. But the market didn't respond that positively to this. And I think Fabian, in my private Discord community, does a good job at giving his take on why this is the case. He says, TLDR, the macro backdrop has shifted incrementally more positive now, but price is still in a weird spot and not yet showing a lot of momentum. So I expect more choppy environment as opposed to a strong trending environment for now, but with an upwards tilt. This means that as far as I'm concerned, dips are still for buying and should be approached with patience, both in terms of waiting for an ideal setup to present itself, but also in terms of weathering the chop once in a position. And I think that's a major takeaway. You really do have to be great at showing mental resilience to weather chops if you are in longer term investment positions. I really don't think now, and I will touch on this, as I said, a little bit more later, this is the time to be panicking and capitulating out of longer term positions. Obviously, shorter term, you have to be a little bit more selective with how you position yourself, what altcoins you're trading, how you're managing your risk across your entire portfolio. But one thing you do have to be really good at is weathering the chop, because these periods of chop don't last forever. And typically when volume actually consolidates into a range, we do see large volume spikes when the market comes out of that range. So just something to keep in mind. He goes on to say here, I know no one likes slow, choppy environments, but TBH, they are easy to play on higher timeframes because you can do so with minimal fear of missing out and often get presented with greater long-term opportunities if you're patient enough. And I really do like this point because the patient ones have time to position themselves in the right trends, the right narratives, and actually build positions based on high time frame macro levels, which is actually, if you think about it from an investing perspective, much easier in terms of positioning than trying to position during a strong uptrend. Trying to position during a strong uptrend, you're often caught offside because the market doesn't really dip, and then the market goes higher, causing you to FOMO. Then during a reversal, you're stuck with an underwater position, which is, in terms of its cost basis, a lot higher than the current valuation. And maybe that's a situation you find yourself in, and if that's the case, maybe you should consider locking into a period like this and really mastering the high time frame setups during an environment like this, instead of getting too overly FOMO-y when the market is in that strong uptrend. Fabian also goes on in my Discord. You can pause it here because I won't go into too much depth. Gives the levels as to the major structural levels that he sees as important to hold from a macro point of view. And they're pretty much the same as mine, targeting this mid-range here for Bitcoin. But of course, all the members of the Mars High Club have access to all of Fabian and my insights on the market in our respective channels. So now let's go through some additional thoughts on the market. I have some controversial takes in this section, but I think they're valid in terms of contextualizing where we are currently located in the altcoin cycle, and then I'll go into my game plan with some exact altcoins. So I don't need to tell you again, altcoins are starting to bleed, and altcoins have been significantly underperforming Bitcoin thus far this year. I'm actually going to link in the description below the video I did on Friday because I think it's super important. It has a lot of the data which explains why there is a little bit of a disconnect right now between the Bitcoin price and the price of altcoins, and thus the sentiment of the market. And that's largely because altcoins, as you can see in front of you, have significantly underperformed Bitcoin so far this cycle. And in fact, it's only really Bitcoin, Solana, and a select amount of other assets, and a few of them are meme coins, which are actually in the green year to date, compared to many other alts which are down 20, 30, 40%. A lot of the popular infra alts actually fit that category. So this chart is really all you need to sum up why there is that discrepancy, because Bitcoin's been outperforming and most people don't hold Bitcoin, most people hold altcoins. So the sentiment obviously is not going to be great when alts are underperforming Bitcoin. And there's a slew of reasons why that's the case, and I go into that in that video that I will link below. The other thing I want to show you is Total 3. This is the altcoin index, which aggregates the entire crypto market minus Bitcoin and Ethereum. Total 3 is breaking out of this flag here. On the 4 hourly, it becomes more obvious. Actually, let's jump to the daily here. You can see that the flag is starting to break down. So we've been condensing into this range. We had a breakout, ended up being a fake out to the downside, and now we're starting to consolidate below. So altcoins showing a little bit of choppiness in terms of their price action. But the real fun for alts typically doesn't happen until you do get a breakout of the tipping point. So I did mention this on the last video that from the breakout of the tipping point in 2021, March, to the highs of the market, altcoins ran 145%. We have not broken that level yet on altcoins. Alts are actually still forming this range here between 555 and 786. That greater expansion to the upside will likely not come until alts break this level here, the new tipping point at 776 bill. And of course, that can take us over $1 trillion plus, which is obviously amazing, and many alts are going to perform really well in that environment. But for now, it's this sideways chop that is making people capitulate, because we've been chopping sideways now for around 70 days on altcoins. But the thing is, guys, we've had such an aggressive run to the upside on alts. So we've seen the altcoin market rally 150%. Yes, it's less than Bitcoin, which is 300%. But after a major leg to the upside, it's only normal that you are going to get a little bit of a reset. a sideways accumulation range. Typically, as we've talked about many times on these shows, summers do tend to have less volatility, and the summer sideways chop is currently playing out right now. So this is the period where you've really got to weather the storm and look to add quality assets as they chop, and you do get these wicks to the downside where you can actually lower your cost basis. So, I mean, on an altcoin macro perspective, nothing is really too alarming here. It's mostly on the lower time frames that you do have to be a little bit wary, as we are starting to flirt with some really key levels. Now, I'm going to present an argument from Quinn Thompson, which is super bearish, and then I'm going to tell you how I agree with him and why I also slightly disagree and have a different opinion. He says he thinks there's serious cascade risk in crypto. In particular, he expects most altcoins to be taken out back. He says the market seems to have lost any ability to bounce, even in majors, while at the same time leverage and open interest remains high. No panic yet. I expect that changes. Gold's rolled over, ETF flows have stopped, ETH ETF is weeks away at best, and despite a number of attempts at breaking all-time highs, Bitcoin couldn't muster the strength. Meanwhile, stablecoin supply hasn't grown in months, and with many venture funds looking to raise capital, they are constantly being forced to show DPI, aka selling. Unlike equities, which have constant passive bids from ETF inflows and bonds, crypto, and in particular alts, have the opposite, a constant stream of sell pressure. As we enter an already low volume summer period, the combination of significant token supply unlocks and VC sell pressure will likely be too strong of an uphill battle for most tokens. Now, there's parts of this I agree with and parts of this I disagree with. Firstly, he says ETF inflows have slowed. We actually did see record days last week I think last week in totality was the highest since launch in terms of ETF inflows. So one of the key data points that he's using to assert his thesis here is incorrect. So that kind of already invalidates it a little bit. He says the ETH ETF is weeks away at best. I actually viewed this as a positive thing because that is a major catalyst still on the horizon for the market. And the ETH ETF, in my opinion, is a massive catalyst for ETH and alts. And with ETH not really showing amazing price action despite the ETF being announced, you can view this in two ways. You can view it, okay, it's weak, the ETF isn't going to impact the market, or you can take the other approach and view it as an opportunity. You know, a lower ETH price ahead of its biggest catalyst in potentially years is actually a good opportunity to position long. And that's kind of the camp that I find myself in. Despite this, there are a couple points which I agree with in terms of the constant stream of sell pressure. And this is the major reason why I think you find a lot of alts underperforming in general, because there's just so much supply constantly coming onto the market. And he does mention here how a low volume summer period combining with significant token unlocks can be a recipe for tokens bleeding in price. Now, in this scenario, what tokens would bleed the most? Well, it's the tokens that have significant amount of unlocks during this period. So the tokens that I would avoid buying into what is a potentially lower volume period for the market are the ones that have significant unlocks. You can see all of the unlocks for tokens over the next month, and there are some alts which are releasing relative to their supply slightly more than others. Starknet is one of them at 4.9% with its next unlock. Arbitrum has a significant unlock as well, likely why it's been underperforming. Alt, 6.9%. Scrolling down the list, you've got Optimism with quite a lot of unlocks, DYDX as well, and you can go through this in your own time and take a look at token unlocks calendar. The thing that isn't being factored into this calculation here of the $57.2 million of linear unlocks per day are the altcoins outside of the major category that are unlocking. So I'm talking about the small caps, the mid caps that are also adding supply pressure to the market. This also affects the market. I did talk about this in my last video, how if you have a currency and that currency is constantly being inflated, you're going to get inflation, meaning the value of that currency relative to the market or other goods and services is going to decrease. And that's exactly what's happening in crypto right now. The value of a lot of alts, or the value of the overall alt market in terms of cryptocurrency, is actually devaluing against the US dollar because you have constant supply pressure coming in to these tokens. It's the exact same thing that happens to a typical dollar when you have the Reserve Bank printing currency. So that is something to keep your eye on, and that's why I do agree with them here. There will be some alts which, if we do get this lower volatility period, they're going to perform quite badly because there simply isn't enough retail inflow or retail interest in the market to prop up a lot of these alts. So what can you do about it? Well, the first thing is, over this period, you have to be very picky with which altcoins you're buying. I would actually prefer most people approach the market holding less altcoins, so a more consolidated basket of alts that you have high conviction in. So right now, I wouldn't really be comfortable sitting in 30, 40, 50 tokens. If you can sit in 10, 15, 20 tokens, but those tokens don't have major supply coming, those tokens are in very strong narratives and trends, those tokens are actually in an uptrend from a price action perspective, these are some of the prerequisites, the 3 prerequisites I would be looking at in terms of what altcoins I would try to be accumulating on dips. So they've got to be in an uptrend, they've got to be from a strong narrative, and they shouldn't have a lot of supply coming. And actually that limits the pool of altcoins in the market right now from thousands to a select few. I'm going to go through a few of those altcoins in just a second here. And you can see here in front of you that Bitcoin, ETH, and Sol have performed 53% year to date. Many other altcoins are down 30, 40, 50%. So far this year, you have an altcoin like TIA, which is down 40%. So if you were capitalized all in TIA, but you weren't in Bitcoin, ETH, Sol, you would be down 43%, whilst everyone else, or that other basket, is up 53%. And you can also compare this to the NASDAQ, which is up 18.5%. Nvidia's up 168%. It just shows that asset selection in this market is so crucial. In terms of timeline though, I want to give you a little bit of hopium here. Like, we're still extremely early. Typically, altcoin peaks have not happened in the past 2 cycles for around 546 days post-halving. Right now, we are only a couple months post-halving. So in terms of the cycle, we're still very early. You're really just weathering these periods of chop and apathy. And if you can use these periods to your advantage, like Fabian talked about earlier, these conditions can actually be great opportunities to accumulate the strong altcoins from the criteria that I discussed before and lower your cost basis across a lot of these alts. Then, when the market eventually does go into this parabolic mode, you're very well positioned. Okay, maybe on the hourly charts, things look relatively bearish. If you're a trader, you've got to be super careful. But from a macro perspective, I mean, things are still intact. And there's major opportunities to be had if we do see shorter term capitulation. There's a classic saying in the market, which you've probably heard before: when in doubt, zoom out. And that really is the case when it comes to speaking about summer 2024. And look, the reality is things can turn really quickly. Like, all it takes is a little bit of bullish news that comes out in a couple of days, and then everyone's excited again. Volatility comes back. Altcoins break out to the upside. Probabilistically, is that the case? I'm not so sure, so I wouldn't be banking on it. But just know that things can change really quickly. And there's really no way of telling when that's going to happen on a shorter time frame. So the best things to do are prepare your portfolio holistically on a higher time frame and then manage risk on a lower time frame. That's generally, how I'll look to approach the market. So in light of this discussion, what kind of altcoins fit the bill here in terms of alts that over the next couple of months could be good ones to accumulate? I really liked this tweet here from Crypto Koryo, which highlights some of the leading alts from their respective sectors based on price performance. He likes ETH5 for the restaking narrative, Ondo for RWA, Drift and Jupiter for Solana exposure, IO for AI, ENA for DeFi yields, GME and NOT for game/meme. So basically what he's doing is he's picking an altcoin based on their price action from each respective sector that could potentially outperform. Now, I like ETH5 as well. I like Athena. I like Ondo. In terms of IO, I'm not a massive fan, but in terms of price action, it looks okay. But I just fundamentally prefer Aethia. We're going to talk about that in a second. But I do like the logic here of looking at what has actually performed and then picking an altcoin from each popular sector. That is also how I approach the market in terms of looking at narratives as driving forces behind trends and then trying to expose yourself to the top leading coins in each narrative. The first coin that during this period I am looking to accumulate, especially if we come down to this 335 level, is Ethereum. I actually think on a market bounce, Ethereum is going to respond the strongest because it has the biggest catalyst, the ETH ETF. And the fact that you're pretty much getting a 50% discount on the ETH ETF news pump is pretty insane to me. And as long as it maintains an uptrend and you've got this major level converging here with the diagonal and the horizontal at 335. I do think Ethereum is a good play, and this is actually my top play for the next few months. It's safe, maybe it's a bit boring, but I do like Ethereum out of all the trades right now. Eugene does a tweet here which explains why he believes ETH is undervalued. He says, 1, this cycle has been an ETF story. Nothing else has really mattered. Only 2 assets in crypto, aka Bitcoin and ETH, are set to receive ETF flows. 2, we've retraced 50% of the entire ETF approval candle move despite positive developments on S1 acceptance and timeline. On a very simplistic level, he thinks it means positioning has halved on good news. 3, Larry thinks tokenizing the world meme almost guarantees that he's going to push ETH to his clients. We've seen it happen with BTC, and he thinks it'll happen with ETH again. I do agree with the thesis there in general. So off the back of that, of course, you've got RWA, which is a sector that I do find interesting alongside ETH to be accumulating on major dips as we get them. There are a few altcoins I'm looking at. Ondo has started to retrace now and is looking to come down and test this 1.16 level. On a more high time frame perspective on the daily, you do have this $1 level as your next major zone, but I don't know if we get there. So look for how we respond around this 116 level on Ondo. For all of these coins, the premise going into accumulating coins like this is, look, you've got to be willing to weather the storm. Your outlook is at least a minimum of a few months, but probably 6 to 12 months plus. Ondo is a bit of an exception because it has major unlocks. So for this one, it's slightly shorter term. For the rest, I do view them as slightly longer term. And your goal is basically to use sideways accumulation, chop, low volatility if you do get major wicks to accumulate these altcoins. I'll speak at the end of this video about my exact accumulation strategy, but pretty much trying to lower your cost basis across strong altcoins. OM is also interesting. Mantra did have that massive pump. It's now back down into the 85-cent region. You have your range high at 75, where it recently broke out from. So that is RWA. That's one sector over this period I'm still looking to increase my exposure to. The next sector that I think has actually been given the right catalysts for a resurgence is DePIN. So I do view DePIN at some point this year performing really strongly, and there's been a couple catalysts over the last few days. The first one is the launch of IONET, one of the biggest decentralized compute platforms in the market. It actually launched super strongly. A lot of coins have been launching and then bleeding. IONET did perform strongly since launch. It has started to drop a little bit, but it also pumped, so that does make sense for it to retrace in its early days. I'm not saying to buy these coins right now, but DePIN in general, on major dips, is something that I'm trying to build exposure to, making that clear as well. The other one, of course, that launched is Aethia. This is one that I'm an early investor in and one that I'm actually more bullish on from a fundamental perspective, as they're actually able to package enterprise compute at a very low cost, is of course Aethia. And Aethia's launch was also super strong. It's kind of hard to tell on CoinGecko with these charts. It kind of looks choppy, but it actually launched, and I was looking at this on the exchange at around 0.06, ran up all the way to 0.1. Now it's back down to 0.6, but at an FDV of 4 bill. So a lot of tokens are now launching and bleeding straight away. This is still maintaining a relatively strong valuation, and I know a lot of those people that got their hands on the nodes ended up getting a nice airdrop. A few people in my Discord, pointed out that they did get a nice Aethia airdrop. So you obviously had that sell pressure coming onto the market as well. So the launch of IO and Aethia, two competitors to the typical established DePIN projects like Render and Akash, certainly spice up the sector. And obviously with NVIDIA absolutely ripping and continuing to make new highs, all eyes, in my opinion, are on these decentralized compute plays, given that there is a shortage in the world right now for compute. So out of all of them, Aethia's probably my favorite, and that's one of the reasons why I invested, because I think what they're doing is amazing. If you actually look at the amount of GPUs that they have the most of any of these projects, and in terms of T-flops power, they also lead the list, and they're also one of the cheapest networks out of this entire list as well. So competitively, they're in a good position, but more broadly speaking, overall, DePIN as a vertical, given the fact that it's one of the sectors I am seeing more innovation in with these new products launching, and is tied into AI, which is clearly one of the strongest narratives this bull run, becomes a sector that I'm definitely interested in on major dips, especially to keep adding exposure. One token which fits this bill as well, it's not a decentralized compute play, but it is a true DePIN play, is World Mobile Token, WMT. Their whole vision here is to connect the unconnected via their network. In the world, billions of people do not have access to internet. World Mobile Token is democratizing access to internet connectivity worldwide, especially in rural areas. And you can see here that you have the deployment of their air nodes in many regional areas. For example, recently the sharing economy deployed 12 air nodes in Pakistan. So there's actually a real map that you can look at on World Mobile's website to look at the total amount of air nodes being deployed, and you can see the network developing in real time. So this is a true deep in play, and for that reason, it's one that I'm super interested in. I also think it's a very reasonable valuation compared to some of the other deep in plays on the market. From a TA perspective, you do have this major support level at 20 cents. You have this other support level at 29 cents. We recently did breakdown, so I'm just waiting to see how things respond here. From a TA point of view, but if we do reclaim this level, then this, in my opinion, would be a good zone to get in. Or, of course, on any major capitulation wicks like this one, you can never go wrong with buying major dips on projects that you're fundamentally bullish on. And that's really one of the major messages behind this video. It's identify the strong altcoins that you want to accumulate, mark out the key high time frame levels for those alts, and set limit orders / bite the bullet when opportunities do present in this market over the next few months. Then, of course, you have the meme coins. Meme coins have taken a bit of a hit. You have Pepe, WIF, all taking major hits. Pepe, you've got that support level at the 1.1 region, which I'm interested in. WIF, I'm very interested in at the 2.26 region. These are now approaching major support levels. I do think these coins will be significantly higher at some point this cycle. So I think any major dips here I want to be accumulating. It's really as simple as that. You've got the leader as Doge and SHIB. You've got Pepe and WIF close behind. Then you've got Floki and Bonk, and then a bunch of other memes following them. But I do like this $2 billion range. Floki, WIF, Pepe slightly higher at 5 bill, because that's the range where you've broken out of being an upcoming meme coin. You're now solidified in the market, but you still have the anchors, so to speak, of Doge and SHIB. Because they're sitting so much higher, you have that scope to go higher in terms of relative valuation, because these coins are just so established. So major dips on leading meme coins I'm always interested in. And of course, if you do want to spin the wheel and win some of these meme coins for free, you can do so using the link in the description. If you just sign up and deposit $100, in 3 days, you're going to get a free airdrop of 3 WIF, 10,000 Floki, 100,000 Pepe. But you can also build up 1 spin per every $10,000 in futures volume to potentially win $1,000 worth of Floki and a bunch of other prizes as well. So to summarize here, we're in a bit of a weird spot for the market because you have a lot of bullish catalysts. You also have a lot of bearish catalysts. We've had some kind of top signals, but I do believe from a macro point of view, we still are very early in the cycle. And despite low volatility periods of chop being really hard mentally, these periods are actually great periods to lock in, focus on the verticals that you're most bullish on. There's less noise, so you can actually go deeper into researching these verticals and focus on building a really well-rounded portfolio that when things recover, you're in a super strong position to capitalize as the market rebounds. So this period for me is very valuable. I'm not panicking at all. I'm really digging deep into the market, researching new stuff, finding new coins. Of course, I'm going to keep you updated as I find new coins because I'm always doing research. And for me, this is a fun period where I'm able to lower my cost basis, build up my portfolio, and because there's less noise, there's less distraction overall when it actually comes to researching and learning, which is super important in the market. So I think a lot of my content over the next few weeks is probably going to veer more into the educational realm. Maybe we can dig deeper into specific sectors and try and find some gems in each of those sectors. If you want that, let me know in the comments below. Maybe that's something I'll do. But overall, now isn't a time to be panicking. It's a time to lock in, and things can change really quickly in this market. So I don't think there's a reason to get overly bearish or overly bullish. From a PA perspective, you're looking for directionality. The price at the end of the day is going to give us the direction that we're craving. But in the meantime, I do believe that's inconsequential. It's all about building a well-rounded structured portfolio and exposure to the strongest assets in the market with, as I discussed, the least dilution in the market, the strongest trends in the market, and the ones that, from a relative strength perspective, are looking the strongest. I hope you have a lovely rest of your day. See you in the next one. Peace out.